You know where you are, hopefully. Silver Symposium 2022. I'm Nick Hodge. I run these websites. A publishing company called Digest Publishing has a free website called Daily Profit Cycle. I own a website called Resource Stock Digest with a partner named Gerardo Del Real, which some of these junior mining companies sponsor, and we help tell their story. And then I write a series of for-pay newsletters, one of which is called Foundational Profits. It's a monthly newsletter that covers the entire market, really. So I'm not a precious metal specialist, not a mining specialist, but more of an agnostic investor who writes about what he's doing with his own capital, both on the safe, retirement side of things that come in the monthly newsletter, and then all the way up to speculative positions that I'm taking, again, with my own capital, either in the open market or via private placements. All of those are websites, by the way, so you can go to digestpublishing.com or dailyprofitcycle.com or resourcestockdigest.com. And I was going to start by talking about memes, because I see a lot of memes lately, posted by all sorts of groups. We had the meme stock mania of 2020 and 2021, whether that was, AMC or GameStop or Bed Bath & Beyond, and then even trickling over into silver, frankly, with the Reddit phenomenon that drove silver stocks up in early 2021. And this meme was really popular in the past couple of weeks, so I threw it up there. And the point of the meme is you put a caption what the drunk girl at the concert is yelling into the guy's ear. And I think she's yelling, posting memes is fun and cathartic, but it really doesn't make you any money. And so I went back and I looked from the beginning of the Reddit saga with silver in early 2021 and found some news articles, and I came across this one by Reuters. They were talking about this gentleman, Mr. Kerry Craker, who has worked in kitchens, restaurants all of his life, and he was buying silver with half of his spare money, half of his cash that he had. He was putting $100 a week into buying silver at the height of the the Reddit Wall Street silver type mania, right? And I was thinking to myself, well, I wonder how well Kerry has done stacking all of half of his cash into silver, especially because that's not a lot of free cash to have. If you've got $200 a week, you've got about $10,000 a year in free cash, and you're really socking all that away into stacking silver. And so I went and I looked, how is Kerry doing? And Kerry's down 30% on the money that he put into those silver bars in early 2021. Kerry was buying at $25 an ounce silver, and here we're closing today at $18.40. So, Kerry's lost 3 out of every $10 or 30 out of every $100 that he had in free cash flow per week into silver. And so I wanted to make this talk a bit about, being contrarian, and in fact being contrarian to being contrarian, and why you might not want to get sucked into meme stocks and the hype of the market, and instead take a more agnostic, intuitive, and logical approach to investing, especially in markets that are cyclical, like precious metals, commodities, and the junior mining stocks that sort of ebb and flow based on the price of those precious metals and commodities. So I've got to pound my chest a little bit. What was I doing in early 2021 when this was going on, when silver was driven to over $25 and mag silver was driven to 23 or 24 bucks? Well, I was selling into the mania. I wrote early in that year, in fact, this is a quote from the newsletter: "I don't need to rehash the Reddit saga. Suffice it to say the masses are pissed off at the institutions. It's par for the course in this fourth turning." If you don't know what a fourth turning is, it's a generational displacement when a new generation rises to replace the one before it. We had marches in the street last year, and now the ire is turning once again to Wall Street crooks instead of crooked cops. The hive is alive, and now they know about zero commissions and penny stocks. This was the time of Robin Hood and all those things coming on the scene, and I said it feels like a top. So I wrote that we should be selling basically some of our precious metals at the time, and some is a key word there, right? I think people that get hyperbolic about going all in or all out or calling tops or calling bottoms are sort of missing the mark. Rick Rule says a lot. The only guy, and he's quoting Bernard Baruch, the only guy who bought at the absolute bottom and sold at the absolute top is an absolute liar, right? So you've got to be able to pick your spots and buy and hold, yes, but trade around positions when the time calls for it. And there's just a little timestamp there from the January 2021 issue of Foundational Profits, noting that we should be selling half of our mag silver. That's when it was at above $21. And just to flash back to the other slide, you see what mag silver has done since then. It's been cut in half. We sold at the absolute top, and I'm not an absolute liar, but just happened to nail that one, right? And so this is going to be a little bit tongue-in-cheek. I'm being a little bit sarcastic. I just wanted to put my track record so you can see actually what I've done. So this would be the track record of the monthly newsletter, Foundational Profits. We don't get it right all the time, but we have beaten the market 6 out of the past 7 years, some years severely outperforming the market. If you add all those numbers up in the left column and the right column, we've outperformed the market for the past 7 years by over 50%. And that's pretty good work if you can get it. That's all with non-speculative, what I would call safe capital, right? We're doing that with NYSE listed funds and companies, country ETFs that track, the performance of different countries, et cetera. I'm not talking about, this isn't penny stocks here. Though I do penny stocks and private placements. And so I run a newsletter that writes about what I'm doing with my own speculative capital and private placements. It's called Hodge Family Office. And here's the returns from those private placements since I've been doing them in 2015. You'll see that average annual return is 88%. And those are closed winners. This isn't what some guys do. They recommend a stock and they pick the highest price since they recommended it. I give sell advice as well. So I tell you when I'm selling. And over the past, 6 years, since 2015, we've been able to average 88% returns in private placements. That's pretty good. My mentor would tell me that the point of private placements is, for every 3 that work out, you're going to have 5 that don't, or some math like that. But the ones that work out spectacularly enough that they cover the losses and then some, right, to add gravy on top. In this case, to the tune of 88% a year. And so I just wanted to give you a sense of where I'm coming from and the track record I've been able to deliver with this approach to the markets. You'll see last year we more than doubled our money on every closed private placement that we did. And so I have to read, this is the only text slide, sorry about that, but this came from a newsletter or a memo that Howard Marks put out in July 2022, just last month. And Howard Marks, co-founded Oaktree Capital, one of the most successful, funds in the history of funds. And he was writing about, what it means to be a contrarian. And he was saying that there's a concept in the investing world that's closely related to being different. It's called contrarianism. When the investment herd refers to the masses of people or institutions that drive security prices one way or the other, all the way to the extremes, creating overbought bull markets and oversold bear markets. And at these extremes, it's essential to act in contrary fashion. And he goes on to say, that doesn't necessarily mean just doing the opposite of what everybody's doing, right? It means for first level thinkers, to the extent that they even are interested in contrarianism, they think that it means just doing the opposite. But in fact, you have to be a second level thinker to be a true contrarian, right? And I would point back to the early part of 2021 when you really should have been selling into the $25 silver and the $22 mag silver and not buying into that mania, right? So in that sense, you got to sort of be a contrarian's contrarian. And I guess I would point to James Dines in a sense. Does anyone know who James Dines is or has subscribed to James Dines? So, he would write a lot about market psychology and being in tune with fear and greed and drinking upstream from the herd. And, I look up to Mr. Dines a lot, and he taught me a lot of things. And when I see people rushing headlong into silver stocks and, getting blasted daily on Twitter with memes about buying and silver's going to the moon, to me, I want to be a contrarian and I want to sell them my stock, not buy at the highest prices that I've seen in a couple of years, right? And so it begs the question, which way is the moon, right? I hear silver is going to the moon. These meme stocks are going to the moon. Bitcoin and cryptos are going to the moon. Well, there's a chart since all this started of Bitcoin and silver, and I wonder which way the moon is. I mean, because those are going not to the moon. Those are coming back to Earth. Now, I get it. This is really a tongue-in-cheek part here. I get it. The Fed is dumb. I get it. The debt is huge. We can't pay it off. We can't even make the interest payments. I know. The dollar is doomed, except it's at 20-year highs. I understand. I get it. Inflation is rampant. It's the highest it's been since before I was born in 1980. I understand. It's going to be a global reset. We're going to reset this. We're going to reset that. I understand. I understand, but at the end of the day, the only price that matters is the last price. And so if you believe all those things, which happen to be true, I'm not denying any of that, but if you invest with that mentality, then you're going to miss out on a lot of opportunities, and you're going to watch a lot of profits pass you by. So when is silver going to the moon? When is gold going to 3,000? As the guy on the stage before me said, that's hyperbole. I made this chart for you with all the red arrows being when the Fed has cut rates, and all the green up arrows when the Fed has increased rates. And it's sort of tough to make sense of it, right? I mean, silver and gold surged after 2008, but it was a year or two after the recession started, and a year or two after they cut rates all the way to zero, right? I mean, you see all the cuts in 2008 where the Fed was cutting all the way to zero, and they left interest rates there all the way until December 2015. And so to try to discern, based on the Fed, what the prices of metals is going to do is a bit of a fool's errand. And then in 2016, when they raised at the end of 2015, they raised by, I think, a quarter basis point in December 2015, you had really what I would say was the start of this secular bull market in metals that hasn't been broken yet. And that was on the back of a Fed hike, not a Fed cut, which everybody is hoping for now, right? And so just a little bit of long-term context there, because I start to wonder if you're waiting for a pivot, you might be waiting for a Godot, like the gentleman who never showed up, right? And so I'm not sure if there's going to be a pivot. And if there is, what does a pivot look like? Is it a cutting of rates? Is it just a pause in the increasing of rates? And that Fed watching stuff, I get that it's important, but it's not what I base the large part of my investing decisions on. And so what is it? Is it 1970s or is it 2008? In the 1970s, you had so this is the Fed funds rate in orange, I should say, and the silver price in blue. And in the late 70s, heading into the early 80s, you had silver rising with federal funds rate, right? Is that where we are now with the stagflation, slowing growth and high prices, or is it 2008 when they cut rates to zero and the precious metals went up? It's well above my pay grade, and so while I like to think about it, it's tough for me to put, again, all my eggs in the Fed's basket. Realistically, here's a silver chart since 2004 or 5, and I think we're in the band there. It needs to hold support basically where it closed today in the 1840, 1850 range. It closed right on that red line today. This chart was made over the weekend, and it's down a couple of cents since then. And if it breaks that, I think you could see $15 silver again, frankly, in a hurry. It really does need to hold the support here. And then on the upside, it needs to get above, call it 2130 or 2150 and close there for a sustained amount of time, or consolidate there before it can move higher. And so, to the moon this, to the moon that, let's deal with this range that we've got to break out of in the interim before we can see $30, let alone $50 silver. But if you're looking for levels, for me, that's where it's at. And this takes into account not just charts, so I'm not a chartist, I'm not really a technician. I look at all sorts of things, stochastics, moving averages, history, and these are the prices, the lines that I come up with based on a multitude of factors. I would also say silver is obviously an industrial metal, right? And we're just now entering a recession. We had our second consecutive negative GDP print for Q2, and I don't really see GDP improving, honestly, for the next 6 to 12 months. And so if you're entering a recession, what does that sort of look like? And if we know that, in 2008, we didn't see higher metals prices until 2 years after the recession. This is a macro chart from Piper Sandler that explains a little bit about the cascading nature and the different things that are affected by a bear market and a recession. And so housing is the first, and you're starting to see that. You're starting to see mortgage companies that are underwater on the things they're lending. You're starting to see deals not closing because buyers can't get approved at higher interest rates or can't afford as much housing as they could once afford at lower interest rates. You're starting to see price cuts. Here in Spokane, you used to have people buying sight unseen, waiving inspections. That's sort of slowed down in the past couple of months here. And so housing, the first thing to go. then new orders, and then profits. So, if you look at the S&P earnings, there's still S&P earnings growth. They're being primarily carried by the energy companies because they got to enjoy $100 a barrel oil in late 2021 and early 2022. But that's not going to be the case going forward. All the other S&P sectors are really weak except for consumer staples and utilities. And now that we're down at $90 or $85 a barrel oil, those earnings in Q3 are going to be reflected here when they start coming out, and you're going to have an earnings recession as well. And we haven't even started to talk about employment yet, which has been relatively strong. So layoffs are the last thing to happen, and it's already starting to concern small business owners, of which I am one. If you look at like small business owners' sentiment, it's the lowest it's ever been. They might not be laying off people yet, but they're certainly thinking about it. Maybe getting rid of their 1099 employees, for example, and so that's a 24-month time span, and all that to say that it could be 2023 or 2024 before we break out of this malaise and get to a better market, a true better market for precious metals, which, as we all know, are cyclical anyway. And so, my mentor tells me when the market truly does take off, all the turkeys are going to fly, right? We could each pick 10 silver and gold stocks, and we'd be arguing about, who was up more. We'd each be up 400 or 500%, and we'd be quibbling about, which ones went up higher. But that's not really a catalyst to own some of these companies that are over in the exhibit hall, right? Especially in the environment that we're at. I talk to some CEOs when I'm doing my diligence and trying to find companies to invest in, and they tell me their stock would be much higher at $40 or $50 silver. Well, it's like, yeah, no crap, but you can't. That's not an investment philosophy. That's certainly not a business model, right? And so until all the turkeys do fly, I think you should probably be careful about which turkeys you're picking and make sure you pick the right ones, because it's really tough to raise money out there in this environment if you're a junior mining company. People are delaying IPOs, they're having their financings open for months on end, or having to reduce the price at which they're trying to raise capital. It's a tough environment out there. And so you really got to be cognizant of that and pick the companies who are able to be good stewards of your capital, who have seen the cycles before, who have a share structure that's intact and not blown out, so they can raise money if they need to. And I'll list some of those criteria here in a second. I'll take my tongue out of my cheek for a second and not be as sarcastic and tell you that, yeah, of course you should hold physical gold and silver. I do. It's, it's stored in a safe, and I don't really think about it. If you want percentages, it's probably 1% to 3% of my overall net worth is in, bullion, right? Bars, coins, St. Gaudens, American Eagles, all that good stuff, right? It's in the safe, and I don't really think about it. And then I have an allocation to physical in my retirement accounts. And I put physical in quotes because I know the audience here. And I do that through funds like GLD or SLV, the SPDR funds. If you really want the physical trust, you can buy those. Many people offer those. Sprott offers physical trust, for example, in PSLV. And in that sense, I have probably a 5 to 8% allocation in my retirement funds, and it fluctuates, right, with the markets and the things I'm seeing out there. After that, I have an allocation to quality, and that, of course, would be the large dividend-paying royalty companies, the Francos of the world, the Wheatons, the Royals, and then, of course, the largest miners. And then I would say you should know where you are in the cycles and trade around your positions. Like, selling is not a dirty word, right? It's okay to reduce your positions. It's okay to buy low and sell high. That's the name of the game. And so to think that you have to buy and hold or continually stack, again, I think is the wrong way to go about it. And that's all with safe speculative money. The last bullet there would be make a few quality speculations, right? So that's what I do in the letter called Hodge Family Office, where I write about what I'm doing with my own capital in private placements. And so that's what I'm going to talk a little bit about now. These are just the criteria I look at when making a speculation, whether private placement or in the open market. Before I look at what the asset is or where it is, I look at the structure of the company, right? When was it formed? How much capital was it formed with? Who put that capital in? At what price was that capital put in? How much do the insiders own? When was the last financing done? These are all the questions that you should be asking the guys standing in the booths out here. How much do you own in your own name? How much do you own in your family's name? Because if it's not reporting, you can sell without telling the market, right? And so That's the first thing that was taught to me when evaluating a company is really get to know the structure. And the company should be forthcoming with that, not just the cap table that they have on their website or presentation, how many shares outstanding, common, fully diluted, but really how much of those shares were raised at what price and who's owning them. You want the full capitalization table. Right? And then how many warrants are out, of course, and what are they priced at? Are they creating an overhang for the stock? Are you going to be able to raise money on those if they are in the money, et cetera? And then the people are obviously hugely important, right? Management is the one being a steward of your capital if you're investing in these small companies, and you need to know that they have a stake in the game and that they've done it before. So, make sure they've done things that they're telling you you're going to do, that they've, if they're developing a brownfield asset in Canada, you want to know about their past experience developing brownfield assets in Canada, right? And then catalysts. And I said, the $50 silver is not a catalyst. $3,000 gold is not a catalyst. I need to know, what are you doing to increase the value of your shares, to increase the stakeholder value? Are you drilling? Are you working towards a study? Are you working towards an assessment? Is it met work? Is it property acquisition? Is it whatever it is, right? And then jurisdiction, because it truly does matter. Some people will tell you it doesn't, but I tend to stick to North America. I love the U.S. jurisdictions. I love Canadian jurisdictions. I tend to stay away, on the whole, from Africa, Asia, and I tread carefully in South America. And so, actually, it's funny. These companies are sponsors here, but they don't actually have booths. I thought they did when they looked at the website. So these are each companies that I've personally invested in via private placements and am a shareholder of. And I'll go through those criteria that I just had on the slide before and why they met them for me. So one's Revival Gold, who sponsored, I believe, some of the lunches and drinks you see here. And Sterling Metals had a booth, but they failed to show up for whatever reason. So you have to look at the website if you want more information about them. I've got a Revival Gold share slide here. So you'll see that, they're 10% owned by management. They've got real skin in the game. They're 42% owned by institutions, 5% owned by Yamana, where the asset that they're developing came from, and 20% owned by high net worth individuals, including myself and other strategic investors. And so there's only 23% available for the retail. I'd also point out that they've got $6.5 million in cash. Now, of course, they'll need more money to continue to execute on their plans to develop the mine that they're working on, which is a past producing mine in Salmon, Idaho. But they've got $6.5 million, so they could weather the storm if they need to. They don't have to dilute at current prices. And by that metric, 6.5 of their $44 million market cap is backed by cash. And this is a company that had put out a resource earlier this year, 4 million ounces of gold in the ground. It is a past producer, was in fact the largest past producing gold mine in Idaho. They still have an ADR plant on site. They got a substation, a high kilowatt line running right to site. And they're drilling now. They've got 2 rigs on site. They're looking to add a third, and they've got both an open pit and an underground component that they're working on, with some high-grade hits that came out of the last drill campaign that were reported in December 2021 that they're chasing up now. So they don't have a booth, but John Mayer is sitting in the audience back there. He just put his hand up. He's the mining engineer, and you're welcome to talk to him more about the company if you'd like. You'll see his picture there, the third one over. So I talked about people, and these are people who have done things, who have worked for major mining companies. John was telling me earlier that, who's the project manager at Fruta del Norte, for example, and spent lots of time with Barrick. The CEO, Hugh Agro, comes from Kinross and he's a mining engineer, spent time, running mines for Kinross in Russia. You've got Steve Priestmeyer, who's the VP of Exploration, who was previously with Soltoro, who found their 30 million ounce silver deposit that was ultimately acquired by Agnico Eagle. And then you've got Pete Blakely, who's sort of the project or general manager, who was the general manager for Yamana when the mine was operating. So literally the guy who did it before. And so that's just the people there, quick. And then catalysts I was talking about. So like I said, they're drilling now, 2 rigs on site, looking to add a third. They're working towards a PFS, a pre-feasibility study that should be out later in the year. And they're chasing up on high-grade sulfides that they've got in an underground. drilling now. So results will be out hopefully by Beaver Creek in the next couple of weeks here as we head into fall. And then on Sterling, much earlier stage company, just made a discovery at Sail Pond in Newfoundland. In fact, if some of you know New Gold, which was a fantastic gold story over the past couple of years, this project, Sail Pond, was going to be their qualifying project for their listing, and they ended up hitting gold at Queensway in Newfoundland, and so they should have brushed this project to the side. But Sail Pond comes out of Altius, which is a quality company, and Sterling made a discovery last year. The shares ran, they came back down. As happens, and they just raised, I believe it was $4 million at 20 or 25 cents. I participated in that round, and so they still got a really tight share structure there. 70 million shares outstanding, and $6.5 million in the cash with a $24 million market cap. So over or around a quarter of the market cap backed by cash with plenty of money to drill, and they're drilling right now as well. So that speaks to the catalyst. They've been drilling since the middle of June. People. This is the people of Sterling Metals. So you've got Richard Patricio, who is very well known in the uranium space. Same with Stephen Keith. They all work out of sort of an office together. Stephen Keith runs Labrador Uranium, which is an up-and-coming uranium speculation that was spun out of Consolidated Uranium. And then you've got Denis Laviolette, who is the founder of Goldspot, which is a company that uses sort of artificial intelligence to compile data and come up with drill targets without having to, actually look underground. And they've been quite successful with that. A lot of companies are now contracting with Goldspot to come up with their drilling targets because of the technology that they have. And then Kelly Malcolm is a geologic consultant to them, and his day job is with Amex Exploration, which is onto its own discovery and is a $200 million market cap. So quality people. And that's about it for me. I'm happy to take questions, but there's so few of you here that I'm going to offer you a little treat. Some of you said you knew who James Dines was. He unfortunately passed away earlier this year. He bequeathed his list to me, so if any of you were Dines readers, I'm now providing service to them via the Foundational Profits newsletter that I mentioned. And he also left a bunch of copies of this book called Gold Bug, which is the Bible of the gold bugs. And so there's two other companies I'd encourage you to check out in the exhibit hall. One is Alianza Minerals. I can look at their booth here so I can tell you what it is. Alianza Minerals at booth 9 and Dolly Varden Silver at booth 16. They both have a box of these books. If you go over there and tell them that I sent you to either Alianza Minerals or Dolly Varden Silver, booth 9 or booth 16, they will give you a copy of James Dines' Gold Bug. So go have at it. And that's all I got, a little bit early, but I'm happy to take questions. Yeah, I mean, I could have given a whole presentation on uranium, but if I'm looking at the entire resource landscape right now, I'm quite excited about the battery metals, the energy metals, and uranium is included in there. I mean, like I say, I could talk a lot about it. We're at $50. It's still got a ways to go. Not a lot of companies make money at $50 uranium, and there's a lot of incentives that just came. So we're seeing capitulation, right? California is extending Diablo Canyon, the 2 units that they have there, and that's a Democratic governor, right, that wants those 2 reactors to stay online. We're seeing the energy and the electricity price situation in Europe with, Germany now saying that they're going to keep their last 3 reactors online, and even Japan, which is where the whole malaise started with Fukushima in 2011, is now saying, by next year, by 2023, we're going to restart 17 reactors, and we want to start building new next-gen reactors. And so the government's providing money for that in the U.S. to extend the life of the reactors that we have. And in the most recent bill, there's a production tax credit in the inflation, what's it called? Dumbass name, the Inflation Reduction Act. There's billions of dollars for new nuclear tech, for domestically processed uranium, and also to keep the plants extended. And so, yeah, I think we're in a bull market for uranium. The price of uranium remains up for the year relative to lots of asset classes that are down, and I like uranium stocks. I mentioned Labrador Uranium in my talk. I was a large shareholder of Azarga Uranium, which was taken out by Encore Energy, and so now I'm an Encore Energy shareholder. They own 2 of the 11 mills in the United States. Amir's company is great. UEC is a great company. Uranium Exploration, Uranium Energy Corp. What else is in my portfolio? Oh, up in the basin, Denison's a good company. They got a stake in the mill. Jordan Trimble's Sky Harbor Resources, I'm a shareholder of. He's sort of a prospect generator and also has his own flagship called Moore Lake that he's working on. So yeah, bullish on uranium to answer the question, yeah. And lithium as well.